A mayday call from the Reserve Bank looks like being good news for borrowers. In this month's board minutes, the board acknowledged the economy is weaker than expected and the jobs market isn't quite as resilient as it appears. Policymakers are now waiting for the next week's inflation numbers before deciding to cut rates. Here's Philip Lasker.
As ANZ Chief Mike Smith pushes interest rates up in one direction, moving in the other direction is Reserve Bank Governor Glenn Stevens.
I'm confident that we will see a rate cut at the Reserve Bank Board's next meeting on the 1st of May.
This month's board minutes observed that economic growth was weaker than expected despite last year's interest rate cuts.
The pass-through from the mining boom to the rest of the economy, if you like, isn't happening as much as they thought it might.
The board says a case could be made for a further easing of monetary policy or interest rates if the weaker economy means inflation is under control. So next week's inflation numbers are crucial for the bank's interest rate decision. It seemed clear enough, but some say the Reserve Bank is changing its tune, so it's adding to the confusion.
They previously said that the inflation outlook didn't present an obstacle to a further rate cut if it was warranted. Now that they've got evidence to justify a further rate cut, they seem to want to see a further moderation in inflation before they cut.
And for the first time, the RBA cast doubt on the resilient jobs numbers, pointing to the lack of jobs growth, a fall in the participation rate and hours worked.
And hence, as they conclude correctly, in my view, the steadiness of the unemployment rate has masked a somewhat softer labour market than they'd previously been prepared to admit.
It all helps clear the way for a rate cut. Inflation and weaker economic growth weren't the only factors cited as influencing the interest rate outlook. There was also a rare reference to the prospect of tight government budgets over the next few years. Some are noticing a Reserve Bank board which is giving increasing recognition to the economy's frailties.
There's a combination of, the data is, if you like, showing them more weakness than they expected, and the composition of the board is a little bit more dovish than it might have been before.
The new board members are former HSBC Australia Chief Economist and Keating advisor John Edwards and former manufacturing industry lobbyist Heather Ridout. Analysts are almost certain the Reserve Bank will cut rates in May. It's the response of the big lenders that may determine what happens from there.
But if the banks don't pass on that full amount, and given that the banks have already increased rates a bit over the last month or two, I think that increases the odds of another move in June or July.
As long as the central bank's inflation fighters don't have a reason to worry.